Hello, everybody. This is Mr. Loo. China government just announced a major policy U-turn on key policies that were damning for the economy. And that's a good news, right? That's a good news. And I think this news is actually very good for China in the long run. Will it lead to a stock market uplift? I don't know. Okay. So let's watch on, shall we? And remember, watch to the end where I give you my final conclusions. As usual, these my disclaimers, and let's go. I think to start off, we all know that the Chinese economy is in some form of a trouble, and this is more accentuated when China's September inflation figure missed market expectation despite monetary easing policy. So the Chinese CPI grew by only 0.4% year on year in September, while the producer price index went down by 2.8%. Now, a lot of you might be saying, Mr. Loo, I thought price fall is actually good for the economy. Well, not really, right? So in this case, the price fall is revealing that there are inherent weakness in the economy, right? So if everybody is active in the economy and buying things, prices should go up. And what we don't want is prices to go up too much, but we certainly don't want prices to go down. That means there is no one buying, right? That's bad. In the news, it's actually now stated very clearly that consumers in the world's second largest economy are holding back on the spending as the labor markets remain weak and property slump drags on. And Chinese CPI growth has remained around zero since March of last year. This basically means that there is a deflationary pressure. This is the headline CPI, as you can see, is around zero. And this is the producer price index is now negative for a long time, And this reflects a very big weakness in the Chinese economy. But that said, the Chinese central bank has already launched an expansionary monetary policy that lifted up the stock market quite a bit. The People's Bank of China rolled out a larger than expected monetary policy end of last month, and that actually have some upward lift in the stock market. But whether that will have flow over effect to a economy in a positive way is still yet to be seen. So the stock market did shoot up, but not for long, right? So this is the Shanghai Composite Index. It went up by 22%. As you can see, something went down. The Hang Seng Index, Hong Kong went up, okay, and then it went down a bit. Why did it go down was because everybody was expecting that the monetary policy will be supplemented by fiscal policies that are strengthening and stimulating to the economy. But unfortunately, the economic briefing on the fiscal policy was pretty meh, and the market were very disappointed by absence of specific stimulus measures, and that unfortunately lead to a adjustment downwards. As a result of the lack of meat in the fiscal policy, the market dived, and it dived pretty significantly. Went down 8% and 11% for last week. And today, as I watch, the market is still down. It's still down today. I think it went down by a few percent point here and there. So clearly, the market is disappointed that expansionary monetary policy is not supported and supplemented by fiscal policy. That's quite a big issue. And I think the Chinese government will know that. Now, take note, while it was not announced, it doesn't mean that there won't be fiscal stimulus. I think the analysts rightfully pointed out that even though they did not announce is because it's the wrong organization, right? It's not the Ministry of Finance that announcing. While they didn't announce, it doesn't mean there won't be any. It just simply means that it's not today, right? Not today. So they're expecting more stimulus measures to be announced. So on Saturday, the minister made some announcement. In a nutshell, they basically announced that they were prepared to raise a lot of debt to fund quite a lot of fiscal stimulus, but they did not give enough specific to what they are going to do. And as a result, the market was still disappointed by it. So what did the analysts think of this announcement by the minister? Everybody think that the government should have a figure in mind, but it needs to go through proper legal procedures to approve those policies. And right now, they can't make those announcements without clearing their bosses. So everybody is still in belief that possibly a strong stimulus from the fiscal policy side may be in the making, but right now everybody's like, until we come, then I believe. So meanwhile, people really make some money, take profits and run for their life and watch whether the policymakers will give some stimulus before they make more decisions. So clearly, this is a very speculative market. And I still reiterate that this is a very speculative, and investing in the Chinese market has an element of gambling, right? You have to take your chances and bet certain things happening. And this is no longer something to do with stock market evaluation and things like that. That said, traditionally, when there are deflationary pressure in the economy, it's very difficult to overcome. Even a Chinese analyst was very clear. Without arrangement targeting demand and investment, it is very hard to ease deflationary pressure. Deflationary pressure is a symptom of a sickness. So they have to deal with the sickness first. And we'll talk about that. The key thing is the overall sentiment for investors is negative. Everybody has lost faith, whether it be consumer, investors, real estate buyers, and things like that. Everybody has lost faith. And while his ministry is trying its best, there's just a big gap between what was being announced and what the market is expecting. And certainly this is something that Chinese government is trying to fix. And they did make some interesting announcement. They did make some announcement on the 14th of October at 10 a.m. And that got the stock market bounce back a little. And what exactly did they say? They make a very interesting announcement. Number one, the Chinese officials vow to refund businesses for illegal or arbitrary fines they impose. That's interesting. They actually admitted that you could have kenaded, okay, you have been hit with illegal arbitrary fines. And if that happens, we'll return you. Second of all, a very interesting thing, right? They are drafting a law to promote private business. Remember, at one point in time, they have this common prosperity law that actually robbed the rich and give the poor. Now they actually pledge to improve the rule of law and prevent illegal steps taken against entrepreneurs in terms of asset freeze or restriction of their movement. And this is very serious because that was the fundamental reason why there was a outflow of so many Chinese entrepreneurs escaping to Singapore, escaping the rest of the world. And they were going after the high-tech companies for many years, starting with Jack Ma and Tencent and those education apps and things like that. Now they say that, oh no, we are no longer doing that. We are stepping up our support for tech companies, setting up a system to promote unicorns or $1 billion company, underscores Beijing ambition to move up the value chain to counter the containment measure made by US government in terms of key technology. This is a very big policy U-turn, right? Of course, the devil is in the detail. I'm sure those Chinese businessmen who got slapped and now already pull out their funds and withdraw, I don't think they will just, in a snap of finger, come back. They will probably do a wait and see. But this is a very significant policy U-turn. And if this were to happen in a big way, will have a very positive uplift to the economy and as a result, the stock market as well. But looking at the way it's being manifested in the stock market today, I don't think people at this point of time, is going to believe them. Remember, trust takes a long time to build and just take a moment to break, right? If you betray someone's trust, and it take a long time to repair back. And I think that's true for policies as well. So this is clearly an attempt to restore confidence in entrepreneurship. These draft laws try to address the concern of private entrepreneurs as well as private property and personal rights and things like that. And we shall see whether it will come to results, right? Right now, let's see whether this will come to pass. So the key thing that we really need to see for China is fiscal policy and powerful fiscal stimulus. I said before again and again, right? What China needs now is a lot less expansionary monetary policy. That one is asking people to spend money by lowering interest rate, gives incentives to tell people to spend by lowering the cost of spending. It's not as powerful that government actually spend money. So everybody needs this spending of money by the government, but this one will take time, possibly in the coming weeks for it to happen. So in a nutshell, how will the Chinese stock market react? Will really depends on policy measures that's going to be announced. Right now, the mood and the confidence is still very bad, but you can see that the government knows what the problem is. And the government is taking steps gradually to address it. Not so easy. Aircraft carrier, to change direction, take a long turnaround. Where if it's a sampan or a speedboat like Singapore, everything want a U-turn, we just turn and go, right? So big countries is a lot more difficult to govern, but we do hope that Chinese economy will do well because Singapore, Malaysia, all of us will benefit from the improvement of the Chinese economy. Meanwhile, let's watch and see. I do hope that the Chinese economy will have a turnaround and then the Chinese stocks as well. So thank you for watching. Remember, hit like and subscribe, and I'll see you in a day or two. Bye-bye.